2 U.S. service members have been killed and several were wounded by an Iranian attack on an airbase in Jordan. Trump directed CENTCOM to open the gates of hell on Iran. U.S. officials suspect China or Russia may be feeding Iran targeting data, and the U.S. State Department issued a worldwide caution alert for U.S. citizens. Today we cover why stocks are falling, what to know, and where the action is right now.
Iran launched ballistic missiles and drones at a U.S. airbase in Jordan on Friday. 2 American service members were killed, 4 were wounded and medically evacuated, and 1 is still missing. This brings the total U.S. death toll to 16 since this conflict kicked off back on February 28th. And Trump responded by ordering the military to open the gates of hell on Iran, which they did on Saturday evening. CENTCOM launched those new strikes on Iran, specifically punishing the forces who launched attacks on U.S. service members. U.S. officials, though, suspect China or Russia may be feeding Iran targeting data because Iran has been striking sensitive sites with unusual precision. Iran has adapted to U.S. defenses, firing missiles that travel at extremely high speeds and can maneuver as they streak toward the Earth. Iran threatened full-scale war if the U.S. continued bombing the country. They said the U.S. violated its commitments under the deal and that now Iran will no longer adhere to the terms of the deal.
Iran Supreme Leader Khamenei called the signature of the U.S. president, quote, utterly worthless. He also warned of unforgettable lessons in store for the U.S. Germany and Britain are evacuating their diplomats from Kuwait, Bahrain, Qatar, and Saudi Arabia. The U.S. State Department also issued a worldwide caution advising American citizens abroad to exercise increased caution, warning that groups supportive of Iran may target U.S. citizens' interests and facilities. Strikes from both sides have now expanded beyond strictly military targets. The U.S. has been striking bridges, utilities, and port facilities, and Iran has struck power and water desalination plants.
And crude oil just had its biggest weekly gains since April. The initial catalyst that sent it up on Friday was that the Trump administration notified Israel it's sending dozens more refueling planes to the country ahead of a potential massive offensive in Iran. And Iraq and Syria signed an agreement to restore an oil pipeline that would provide an alternative route to the Strait of Hormuz, which might actually be a good thing if it comes to fruition. But something that's not very good, at least for stocks, is that Trump threatened to increase tariffs on Canada, citing what he called willful negligence resulting in forest fires that are polluting air across the U.S. And Canada is one of the largest U.S. trading partners, and we've already learned that tariff escalations have real ripple effects across a lot of sectors and the stock market.
And the semiconductor ETF, ticker symbol SMH, dropped almost 9% last week, posting its 3rd weekly decline in 4 weeks. Chinese AI models are rapidly closing the gap with leading US systems, often matching or rivaling them in benchmarks, while being a lot cheaper and more openly available. Chinese open-weight models often cost a fraction, sometimes a tenth or less, of equivalent US systems, making them hugely attractive for developers and enterprises. This week will be another big week for the stock market in terms of earnings, as Tesla, Google, Intel, and many more companies will report.
Yeah, these stocks are highly influential within the AI space, so keep them on the radar. But the economic schedule is actually very light this week. There isn't too much. There is weekly initial jobless claims on Thursday and then new home sales data on Friday as well to keep on the radar. And talking about home sales and housing data, foreclosures just hit their highest level since 2019. In the first half of 2026, about 228,000 homes in the U.S. had a foreclosure filing, up 21% from last year. Foreclosures are now back to pre-pandemic levels.
And the number of Americans who are not in the labor force, meaning they're neither employed nor actively looking for work, rose by 832,000 in June, hitting 105.8 million, an all-time high. And as a percentage of the population aged 16 and up, 38.5% of it is now not in the labor force, which is the highest level since the 1970s, excluding the pandemic period. Looking at SPY right now, it is now 2.26% off of its all-time high. Tom, what are you seeing on the charts?
Whenever we look at SPY, last week we talked about the big weekly range that SPY was stuck between, and on Friday we actually saw this range break to the downside. It happened early on as the stock market gapped down, and then the big kicker was that the SPY actually rose, tested the end of that range, and used it as resistance before falling yet again. So keep that level on the radar to the upside. Breaking back above this 747 to 748 zone would be critical for the bulls and be a good bullish sign. But given all the recent updates with Iran and the worsening of this Iran war, I'm really eyeing up this big support from the past few weeks, right around 739 to 740. We've seen multiple touches with the S&P 500 and the SPY off of this range. If this breaks down, be ready to see a larger collapse to around the recent low, around 727.50. That will be a big level to test. Technically, SPY did have a little hiccup in the middle of the day on Friday, June 26th, where it ran down to around 717. That will be on the radar as well. Granted, though, that is pretty far off from where we are right now. That'll probably happen, though, if the situation continues to worsen.
Yeah, not that 2026 is an ordinary year by any means. July historically is a pretty good month for the stock market, generally speaking, but during the second presidential midterm years like this year, July is the only month that goes green under 50% of the time. The good news is that we do normally see a big boost for the S&P 500 in Q4.
Yeah, as we go out to some of those later columns like October and November, the market goes green 100% of the time, and the total year change also goes green 100% of the time, with average percent returns of 20%, which is actually a pretty good number. But Mike, I think it's time to jump into some setups and predictions for tomorrow. And with my first play, I'm looking at ticker symbol APA to the upside. I really like the short-term price action with APA at the end of last week, as it's starting to break out and test the upper bounds of this 35 to 35.50 resistance. As I look at it, APA Corp is an independent upstream energy company focused strictly on exploration and extraction of crude oil and natural gas. So of course, right now with the Iran situation kicking off and with oil starting to explode, I am going to be watching this stock up, especially as it's in a massive daily wedge. It's used this lower zone of support around 32 multiple times, and it's bouncing off of it again, and we're also testing that clear downtrend. And if we do get a good gap up to start this week, we could see this trend start to break and see the stock start to fly back to the upside. I really like some of the resistance right around $38.50. That will be a good first target for me, although if oil does really rip, I think it could go a lot higher than that too.
Yeah, let's keep it close on the radar. Another stock, or technically ETF, that's still close on watch is DRAM to the downside. This is one that has been mentioned quite a bit along this drop lower, but memory chip companies have been some of the most volatile and crazy stocks in the market over the past year, and while they had a great move higher, they're also reversing in a pretty crazy way. DRAM is on my downside radar for as long as this stock continues to put pressure on its recent lows. We can see on Friday it was mostly break even, but for the week as a whole it was down roughly 16%. If we especially start to put pressure closer to that $49 to $50 level, it'll definitely be on the radar for more potential downside. Again, memory chip stocks are some of the most volatile stocks in the market right now, so if you can't handle that level of volatility, don't consider this.
Yeah, even sometimes like when they pull back to the upside like it attempted to do Friday, they can have some crazy recoveries followed by these insane drops. I'll be watching it closely. The average percent rise on DRAM is 3.63% over the past year, which is pretty high. But speaking of volatility, with my next play, I'm looking at ticker symbol UVXY to the upside, and I'm actually looking to take advantage of an increase in VIX, or the volatility index. We can see that the VIX is starting to pop off of this lower zone. It's held this $15 range very well, and it's bounced off of it multiple times recently, extending up to around $23.27, $23.30 at its peak. I will be watching for a retest of that peak, if not even higher here, over the next few weeks. I really think that UVXY is a good one to take advantage of this. Now keep in mind, UVXY and the way that it's set up, it decays over time, but it has these periods like we saw in the middle of 2025 when the market dropped, or even in 2024, where it can increase a ton within just a few trading days. So keep UVXY on the radar, and also watch SPXX. SPXS, I should say. This is a 3x leveraged ETF that essentially goes up whenever the SPY goes down. It moved up 3% Friday, and this is another thing that you can use to take advantage of a falling market.
Very nice. Yeah, another group of stocks still close on the radar is the energy sector. We've been talking about this so much, and it's moving higher in a pretty nice way. Stocks like UGA, which follows gas prices, XLE, which tracks the energy sector in a broader sense, or even ticker symbol CRAK, which tracks refining companies whose profits have been especially increasing as gas prices have been as well. All of these stocks and many other related ones are close on the radar, especially considering the continued escalations in the Middle East. The longer that goes on, the more energy companies will likely benefit.
Yeah, this recovery to the upside with these energy companies is great in the short term. Like XLE's been holding its support well, and I gotta shout you out, Mike. Ticker symbol CRAK has been flying through the roof, tracking those oil refiners. But I think it's time to get into today's momentum plays as well. And with the first one, and we're looking at ticker symbol LMND, back to the upside. This rose 4% Friday. If it can break above 67.50, watch LMND up.
All right, with the next one, we have Lucid Motors, ticker symbol LCID, also to the upside.
Yeah, we called this one out on Thursday of last week as it's going crazy following some bankruptcy rumors that the company denied. But if it breaks above 755, watch it to the upside into this week.
And then with the last one, we have Affirm, ticker symbol AFRM, to the downside.
Yeah, Affirm got smacked on Friday. If it breaks down under $75, watch AFRM to the downside.
All right, so we have these three stocks on the radar for potential continuations. Always protect yourself. Only enter trades you know why you're entering, you feel good about, and focus on what matters, which is making smart, disciplined trading decisions. We have a bunch of great free information in the Stocked Up Discord group that might be helpful, so definitely check that out as well. But besides that, let's jump right into today's $7.5 million big money trade. And today we are looking at ticker symbol MCD, McDonald's. So on Friday, the trader here bought the 280 strike call options that expire on June 17th of 2027. Everyone knows McDonald's, and looking at its stock, it is in its largest percentage drawdown since the 2020 COVID crash, surprisingly. And the trader here appears to be positioning themselves to take advantage of that by buying these long-term call options. McDonald's is, of course, a pretty stable company. They've also raised their dividend for 50 consecutive years. And in uncertain market conditions, investors typically rotate into more stable, strongly cash flowing businesses like McDonald's and Walmart and other companies like it. We have seen a little bit of a rotation over the past week, and it appears that this trader is positioning themselves potentially early for that. This is a longer term trade, so if you're considering it, make sure you're willing and happy to give it the time it needs.
And McDonald's has been in a huge long-term uptrend, and I know that this is the longest or largest drawdown since COVID, but whenever I look at McDonald's, it's really been very consistent within this overall channel, and this is the third big test of the lower end of the channel. It's held this a lot, and what this does is it creates a really good risk-reward ratio in the short term. You can essentially use this support as a good area to stop out. Let's say we enter into the play Monday morning, you could stop out somewhere around 260, maybe a little bit less. But if McDonald's starts to recover over the next 12 months or over the next 8 months or so, you can start to see some pretty good gains and potentially see this stock recover up to $300 or even more, making the risk-reward ratio go well above 3, potentially even pushing 4 or 5, depending on how high you target. And if you think, well, McDonald's moves slow, it probably can't come back that quickly, well, look at the last time it touched the bottom end of this channel. It came back pretty quick. It only took a couple of months, actually.
Yeah, so let's keep it close on the radar. Should be interesting. And if you're new to the channel, welcome, and consider obliterating that subscribe button. For every single trading day, we post brand new videos just like this one, showcasing crazy multi-million-dollar big money trades, stocks to keep on your radar, SPY levels and analysis, upcoming events, important information, past stats, and basically everything you need to know and more. It takes a long time to make these videos, and if you subscribe, you'll get them recommended to you more often, so definitely consider doing that. And let's also give a giant shout out to today's member of the day, Aoli,